Good morning, everybody. Welcome back. Welcome, traders. Um, this is our weekly Sunday noon updates and recap video. I'm also going to go over the new simplified strategy. But at first, let's just take a look at the risk disclaimer as usual. I'm not a financial advisor. Everything that is discussed in my videos is for entertainment and education purposes only. If you follow anything that I point out in my videos, you're responsible for your own losses. I am definitely not responsible for it, so keep that in mind. If you need financial advice, you can always contact a licensed financial advisor. That's not me. I'm just a guy trying to make money in the Forex market. Alrighty. If you can hear me, say hi. Let me know in the chat. Hi, Chandru. I hope you can hear me. Just let me know so I don't have to check myself, please. Check, 1, 2. Check, 1, 2. Looks like the mic is working, so yeah, let me know in the chat if you can hear me. Just so that I don't talk to myself for no reason. I just wait and give it a few minutes. I think we have quite a few people coming today to the live stream. In case you can't make it, don't worry about it. Sweet. Hi guys. Hi Chandru. Hi Foss. Appreciate it. Thank you. Perfect. All right. If you can't make it to this live stream today, or if you have to skip out at any point, no worries about it. I'm gonna record everything and it will be available on my channel later on as a video, so don't stress about it. Okay, so first thing I want to go over with you guys is I actually have a Twitter account now. So I did create a Twitter account, Mastering FX. It has the same profile picture that I use on YouTube. So if you want to follow my Twitter, it's in the description of the video. I'd appreciate a follow. It's a brand new account. I did have Twitter before, but it was a personal account. So I figured for this endeavor, I'm just going to open up a Mastering FX only Twitter account, so I don't mix up my private and my business. I post updates there as well. Okay, that's the first thing. Then I wanted to go over the status right now. As you all know, right now I have a 50K account funded and a 100K account funded with my Forex funds. And last week I was able to get my payout from my 50K account. It was my second payout from them. It was roughly 11% on the account. So my payout was 5,800 something, which was pretty good for 2 weeks. That's a pretty good payout on a 50K account. And I used that money to sign up for more challenges because my goal is to, get funded to at least 1 million, hopefully more down the road, but 1 million is the next milestone that I'm shooting for. And those new challenges have already been running for, I think 3 days this week, 4 days, something like that, which was good because in the beginning of the week, the first trading day and the second, I actually dipped down a little bit. I had some losses, so it was perfect timing to add the accounts when I was in my recovery phase. So they're actually in profit right now, so that's a good thing. So let's just go over this right now. This is my Forex funds. This is the 50K account. Currently we're up, and you can see this here, evaluation phase 1 demo. We're currently up 2,369.22. So we're a little bit over 50% at profit target already after week 1, which is good. So that's the next. Then I have another 100K account, which those percentages are pretty much the same because I copy my trades. So this one is up 4,700 right now. Profit target is 8,000, so we're as well over 50% already at target. And then I purchased a 300K account. You can see this here, also 14,000, so a little bit over halfway there. Profit target on this one is 24,000. So things are looking good. I also got 2 FTMO accounts. Now with FTMO, I had an issue to purchase both accounts at the same time. So it let me buy one challenge, but for some reason I could not get the second challenge right away. I was even, my payment was declined. I was even on the phone with my bank, and there were some regulations on their end where they have a max amount that I can use per day, unless I announce that I want to use more money. So we had to lift that restriction for the day, but then it would still not go through, probably because my card was flagged or something. So I just gave it a rest for a couple of days, and then I tried it again with another card and was able to purchase the second challenge. So I have 2 200k accounts or challenges running on FTMO right now. That's why there's a difference in profit. So this was the first account that I got at the same time that I got my Forex funds account. So this one is currently up 8%. I'm sorry, 4%. So it's getting there, a little bit over 4%, as well as my other accounts. But with FTMO, as you know, you need 10%, not 8%. So we're about 40% on the way right now. And the second account I got on Friday. I did not intend to get it in the trades on Friday because of NFP. However, I took a quick scalp and I made $700 on that account on Friday. So it has at least started counting the days. So that's why I took a small trade, just to get the 10 trading stay knocked out as soon as possible, because I assume that I will reach the target before the 10 trading days are over. So I took a quick scalp on gold, and it was nothing big. It was $100 or $200 on my 50k account, and then of course it's equivalent more on the 200k account because it scales up. So that's where we currently are. I'm expecting to pass the first phase of all the challenges that I have running by the end of next week. That's my goal. I'm not sure if I can make it, but that's what I'm shooting for. And then hopefully the week after the verification, and then we can add all those accounts to my funded account portfolio, and that would take me to $1 million funded. That would be nice. So on my personal accounts, or my funded accounts that I have right now, this is my 50k account. Like I said, I had a dip at the beginning of the week, so I had some losses, and I walked away because I was not following my own rules, and I had to get my head straight into the game, which I did, and then I ended up closing the week with $1,000 in profit here, and then the equivalent on my 100k account, $2,000 in profit. So currently I'm a little bit over 3,000 on both accounts, which is payout money for next week, end of Friday. Hopefully I will make a little bit more this coming week, to add a little bit to it, and then get my third payout already. Well, my first payout on my 100k account. Oh no, hold on. The 100k account, I have to wait 30 days because it's the first payout. So I can't touch the 100k account until the end of the month. But my 50k account will be eligible for another payout. So that's where we're currently at. And then just FYI, I have Telegram open as well in the Mastering FX channel. Link is in the description, by the way. It's free to join. So if you have questions, you can either message me on Telegram directly, or if it's something, a common question, you can ask in the channel. And yeah, hi Sia, Paul, I got it now. So yeah, that's where we're currently at. Like I said, we're, I think, 58% of the way of the way with my Forex funds, with the challenge accounts, and we're 41% on the way on FTMO, because they require 10%, not 8%. And the second account, like I said, I just started on Friday, took a quick scalp just to get it going, and get knocked out one trading day. So that's where we're at right now. That's that. Let me think. Yeah, that's a recap. Like I said, beginning of last week, I had a little bit of issues with my own psychology and took a step back after I had a couple of losses, and thankfully I recovered by the end of the week and ended the week positive. Not much, but profit is profit, so I'm not complaining. Hopefully next week will go better, and I might get 2 or 5 figure payout by the end of the week. That would be nice. Okay, let's go over the new. Oh yeah, down here you can also see this is my 50K account. Then I copy my trades here to my 100K account. You can see the balances down here. You can stop the video or pause it. This is the personal account that I'm using. Like I said, I started this one with 500. This was already down to 380. But now that I have my stuff together, I gotta be careful what I'm saying here. I was able to bring it back up to 487, so that's my personal account that hopefully will grow over time. This account is set to take 4 times the risk that I take on my challenge account, which is 25% risk on my challenge accounts. So 4 times the risk would be 1%. On my personal account, I have no problem doing that. You can see it up here, risk factor 4. And hopefully grow my personal account over time as well. And then here we have the 300K challenge account, the 100K challenge account, the 50K challenge account, and then the first 200K challenge account with FTMO, and now the second one with 200K. So they're all connected to my 50K account that I have funded with my Forex funds right now, and I just copy my trades over there. That's another thing I wanted to go over real quick. I know I mentioned that before, but if you happen to go the route of prop firm challenges, I had an issue with account size, to be honest with you. I was not used to trading an amount that is that big. I got used to the 50K account now, so I have no problem trading it anymore. But the first month I had a tough time getting through the month and ending it with profit. Gonna be honest with you. So my payout was only my refund and a couple $100 on top. So I only got like 600 and something payout over the month. Because I was not used to trading 50,000 in real money. So I had some psychological barriers that I had to get over with. So my recommendation would be that you start with an account that you feel comfortable with. And my Forex funds goes as low as 5,000. If I'm not mistaken, yeah, I think 5,000 is the lowest account that you can get. Start with an account that you're actually comfortable with trading when it comes to the account balance, and then keep that account separate from all the other accounts that you do in the future. My recommendation would be to at least get a 10K account so that the copy trades later on are more accurate, because the lower the account, the less the lower the account balance is, the less accurate the transition to the higher accounts and lot sizes is. So a 10K account is, I think, perfect to start out with, and then keep that account separate. Don't merge it with all the new accounts that you're hopefully getting down the road. Keep that as your main trading account so you feel comfortable with the amount that you're trading, and then just be surprised by the results on your bigger accounts. Like you just saw on the 300K account, I made 14K in the challenge, not real money. But I would probably freak out trading an actual 300K account, to be honest with you guys. And I heard from many people that that's a big issue that they have when they transition to bigger accounts. So luckily, like I said, I'm used to the 50K account now, but I will keep that account separate. Even if I pass all those challenges, I will merge all my accounts. Well, I have one 300K account already as it is, and then I'm gonna merge the other accounts to a 250K account, and then keep this 50K account separate from that. I will not merge it to two 300K accounts, just so that my trading psychology doesn't go wacko on me. Because like I said, I had a hard time the first month trading that 50K account. Now I'm used to it, I'm okay with it, but if I go higher now, it would start messing with my head again. So I'm just keeping that separate. Just a tip as a side note that, like I said, start with a 10K account if you're comfortable with it, and then keep that 10K account separate from all the other accounts that you get down the road, so that you don't not running into that issue with higher lot sizes and higher amounts in the P&L and whatnot. So yes, and then also I want to point that out again. The biggest hurdle that I had to making the switch between, or the jump from being a break-even trader and an actual profitable trader, was for me personally to learn how to take losses. So the strategy that I'm using here is not a loss-free strategy. You're gonna have losses down the road, and but I learned that there's nothing wrong with it, because usually your winners are way bigger than your losses. And I had to learn to just take that L and move on. In the beginning, I tried to kind of trade myself out of the hole and then take the loss, and just dug myself deeper and deeper. And I think that's something that a lot of traders are struggling with as well. So my advice is just take the L, move on. Usually, not always, but usually you get an entry right after again, and you just enter again until the trade works out. I had actually had that happen on gold. When was it? Here, on Thursday. You can see gold on Thursday. So we're coming out of the Tokyo session, which is the blue box. Well, technically it goes a little further, but that's where I start trading. And I had my first entry. Let me make this bigger so you can actually see that at home. Yeah, so we're coming out of Tokyo, and then I had my first entry right on this candle here. I put my stop loss right above the high, as I always do, and then you can see I got wicked out of the trade, which is fine. I took the L, and then you can see right after, 2 candles later, we got another entry, so I took that entry, and then this ran for, if you took the long exit road, you would have closed the trade right here following my strategy. So that was 144 pips. I didn't trade it that far down because at some point I was at 4% on the account, or 3.6% on the account. So I just closed all my trades and was happy for the day. But if you follow the strategy and the correct exit, it would be right on this candle here. And I explain that in a second. So you can see that, what was that? So we had a 23 pip loss, and then later on we had a 144 pip trade. So taking that L, yeah, it sucks, and it kind of like messes with your psychology, but just be confident in the system. If you're not yet, trade it on a demo account for a while, see how effective it is. And then once you get the confidence, then you just take the L. Trust me, just take it, wait for the next entry, which was here, and you make your money back 5 times over. So it's really not a big deal to take a loss here and there. I had to learn that, get it in my head. And once I understood that, and I mean, I knew that, but once I accepted that and, just took it for what it is, that's when I started to make the transition from being a break-even trader to actually being profitable. So take this as another word of advice. That helped me getting out of that being up and being down, being up and being down, or being profitable for a few days or a couple of weeks, and then gaining a big loss again because I couldn't take the hit and tried to dig myself out and got deeper into it. You just never know. This could run higher and higher and higher. The market does what it does. All we can do is take high probability entries and then hope that it works out, which with this strategy, 80 to 90% of the times it will work. So you gotta learn how to take a loss and then just move on from there and don't even think about it anymore. That's where I'm at now, and that's how I'm able to be consistent with my profits. So keep that in mind. That was the big thing that enabled me to move on to being profitable from break even. All right, so let's go over the new strategy. Let me pull up the trading plan documents. Here it is. All right, let's go over this. Let me make this a little bigger so you can actually see that. Let's go to 16. Let's make it 18. Okay, that should do it. All right. Can you guys see that on the screen? Is that big enough? Let me know in the comments. Take a sip of coffee real quick. God, that delay is horrible. I can see myself changing the font size right now. So yeah, let me know in the comments if you can read that. Big enough? Okay, perfect. So the trading rules have I simplified them a little bit. Not much has changed. A few things fell off and a few indicators fell off. I just tried to make it a little bit simpler and also a little bit lighter on the CPU because I heard from several people that they had issues with the computers freezing and whatnot, and I even noticed a lag on my computer, and I have a fairly new computer. So I tried to simplify it a little bit and got rid of some indicators and whatnot, and this is what I came up with. So general rules, not much has changed here. Follow the rules is the most important rule. Please always follow the rules. If you do not follow the rules, you will lose with that strategy. And I mean it. I experienced it myself. I didn't follow my own rules and I lost. So keep that in mind. So rule number 2, always check for high impact news. Don't trade pairs that have high impact news during London session, which is the session that this strategy works the best. Somebody mentioned in the chat room possibly using it in the New York session, and I went over it and looked back. It does work in the New York session as well, but most of the time big moves actually start in the London session. So some days you really have to sit on your hands and you will not catch a trade in the New York session. So if you can, and if you really want to make some profits and past challenges, I would really highly recommend that you do whatever you need to do to be available during the London session or our trading time, which is at least 2 a.m. Eastern Standard Time, which is 1 hour before London session. I personally moved it back to 1 a.m., which is 2 hours before London session. But I would highly recommend that you use the London session if you can. Like I said, you can trade it in the New York session, but don't be surprised that you do not get an entry every day. So it will happen. Then the trading time, as I just mentioned, 1 a.m. to 11 a.m. I moved it back to 1 a.m. because there are some moves happening at 1 a.m. But at latest 2 a.m. That's what I would recommend. That's the latest. I usually get to the charts at around 1, and then I check what's going on and then see if I can catch an entry. Then number 4, trade only one full move per pair per day if available, then walk away. So what do I mean by full move? Let's use that gold example here. So per our trading rules, which I will go over again, but I'm just letting you know, we had it, like I said, the first entry here got stopped out, got a second entry here, and then the full move would be latest here. That would be the end, regarding to my rules, right on this candle. And as you can see, that was pretty much the bottom before it turned around. And to be honest, if you catch 144, 145 pips, that's more than you ever need. And you can see the risk-reward ratio. You got 30 pips stop, and you make 144, so it's pretty decent. You can't complain about that. That would be the full move. Once you have that move, in this case, this was outside of our trading time anyway, so you could have cashed out here anywhere. That would be perfectly fine. Nobody's gonna blame you for taking a good profit off the table and just walk away. But that would be a full move from beginning to end. So only trade one move a day, and that's it. And then once you have a full move, walk away. Now, a full move usually goes throughout the session. If you have a short move and then it turns around and you're only up like, I don't know, let's say 0.5% on the account, then by all means take that move and go the other way, and then ride that move, hopefully being the right move on the day, and then take that move. But that's what I mean. You have one good trade a day, and then you leave it be, close your terminal, walk away. That's what I do too. There's no reason to overtrade, and especially with the strategy, like I said, it works the best in the beginning of London session or right before London session. The further into the day you get, the less likely you're gonna have the odds in your favors. So don't make that mistake. That's why I have that rule in there. Okay, I have it open twice. Hold on. Okay. Always use a fixed stop loss. Like I said, you gotta if you are not there yet, you gotta learn how to take a loss. That was my biggest hurdle, and that's why I have it in the general rules, just as a reminder, because that's what always got me in trouble. And ever since I learned how to take the loss, I was able to actually move forward in my trading skills and psychology and actually make money. And then also, when you lose 4 trades in a row, we're risking 0.25% on the account if you do a challenge. That means if you have 4 trades lost in a row, you lost 1% on a day. If that happens, and it will happen, I'm just gonna forewarn you, you will have those days where it's just not working. But if you have you lose 4 trades in a row, which comes out to roughly 1% on a day, then walk away, come back the next day. It does not always work. It's not 100% strategy. So keep that in mind. Don't revenge trade. Don't keep going at it. If it's not working, it's not working. Sometimes the market plays with you and you might have 2, 3, 4 losses in a row before you get the winning trade. So keep that in mind. I made it 4 trades because I trade 4 pairs. So that means I have 1 loss per pair. And if all 4 go into a loss, then I'm done for the day. I walk away, especially when you're in a challenge. Now, when you're in, if you trade your own account and it's your own money and you don't have any rules, like I said, in my own account I use 1% risk instead of 0.25, but I'm okay with it, and I don't have any rules that would take my account away. And it will be a bigger hit. It is what it is, but also the profits are going to be bigger as well, percentage-wise. But as a general rule, like I said, you have 4 trades, you lose 4 trades in a row, then be done for the day, walk away, come back the next day. And the most important rule, again, only take trades on candle close. All those indicators that you see are repainting or recalculating indicators. So there will be times when a candle forms and you get a signal and then you jump in early, and then when the candle closes, that signal disappears again. So always wait until the candle closes. You got to put the odds in your favor. The more you have the odds in your favor, the more likely your trade works out, and the more likely you're going to make a good profit on it. So those are the general rules. They have not changed a whole lot. Now to the entry rules. This is where new stuff shows up. We have now a prime entry, and we have a secondary entry. The prime entry is when the move starts, basically, and the secondary entry is a pullback entry, which I mentioned last week during one of the sessions, that I might come up with something that would allow me to enter a trade on a pullback. I just had to think about how to define a pullback, and I was able to do that. So the prime entry, let's go with that one first. We can use gold again. So the first condition needs to be that the green band comes out of the purple band, like here, right here. So it crosses out of the purple band. That's our first condition that needs to be met. When that happens, we are waiting for a white arrow. The first arrow comes in here, as you can see. And when we have that arrow, then we need to wait for a confirmation, not from all 6 indicators, but from the first 4 indicators. I changed that because those indicators usually, especially if you have a strong move, in the other direction before the entry, those indicators don't catch up in time. However, these four indicators, the first four indicators, are catching up in time. So you get the white arrow, so that's the second condition. S and R dots, they were already there. They usually are. So they repainted as well up here once they ran that stop hunt here. So you got your S and R dots. This is optional. You don't always get them in time. But if you wait for them, it's definitely a safer entry than without the dots. Also, it gives you a exact point where you put your stop loss right above it. So S and R dots, I personally wait for them. And then the fourth condition that we need, that the first four bottom indicator agree. Once that happens, you wait for the candle close, and then you enter the trade. So in this case, on the first trade, it was right here. Now this fourth indicator here, the new one, when it flips, it usually flips with 2 bars. Don't get tempted to take the entry when you see 2 bars flipping. You gotta wait for the candle to close. And again, all the indicators repaint. So even if it flips 2 bars at the same time, which happened here, you wait until the candle closes. No exceptions. And then you take your entry, you put your stop loss right above that high, and then you're good to go. Fasten your seatbelt, you get stopped out, great. And then you get another entry right on this candle here. Again, this was 2 bars that flipped at once, which is fine. So you take your entry here, stop loss above here, and then off you go. So that's the prime entry when the move begins. Now the secondary entry, and I think I found a good example on GBP USD for that. Let me just go back a little bit. Yeah, right here. Okay, this is GBP USD. That was on Thursday as well, I think. Was it Thursday? Yeah, on Thursday. You can see that obviously the prime move started before the session started. Now, actually, the entry, the first entry that we got was right on this candle here, which was the fourth candle of our trading session. So you could have taken that trade right here, but it was right at the beginning of the session. So what if you missed that? So now you can take a pullback entry, and we actually get that here. And a pullback entry is defined by at least the first 3 indicators. Most of the times it's the fourth indicator too, but that's not necessarily given. But the first 3 indicators need to switch green for at least 3 bars. That is a valid pullback. So you see here we had only 2 bars, so this is not a valid pullback. It has to have 3 bars. Here we have 3 bars, but we only have it on 2 of the 3 indicators, so that's also not a valid entry. This, however, is a valid pullback, and when those flip back to red, which was right here, you can take a pullback entry right here and put your stop loss right here. We don't have support dots here, but this is fine. And you even get a tighter stop loss. That was only 16 pips. And then the exit for this one, I probably would have closed it out right here, even though it was still going. But I mean, this is 216 pips. That's a massive trade. And if you put one lot on that, it's over $2,000 in one trade. Okay. So those are the 2 new entry methods. Like I said, prime entry is the beginning of the move. And if the beginning of the move happens in the Tokyo session, which sometimes it does, and we don't take trades in the Tokyo session, or before 1 a.m., let me put it that way, then you wait for a pullback entry. You can use that one. And if this does not happen as well, well, then there's no trade for you that day. It is what it is. But you have those 2 possible entry methods now, which allows you to participate in a move like that even if it already started. Not always, like I said, you don't always get that entry, but if it happens, and in this case You can see it did. We had more than 3 bars on all 4 indicators actually. And then as soon as they flipped back to red, which was right on this candle here, you can enter here, put your stop loss right above, gives you a really tight stop loss, and then you can write it down to for 200 pips. No, it was a really nice trade actually. I missed that one. Okay, so that's also new. We got 2 possible entry methods, which will hopefully make it even better. So again, pullback definition, at least the first 3, sometimes the 4th indicator, have switched color for at least 3 bars. That's minimum. 3 bars is minimum. If it's 2, don't take it. If it's 3 but not all switch colors for 3 bars, don't take it. But if you have at least 3 bars that switch green on a sell, then that's a confirmed pullback and you can enter. Yeah, and again, when all the indicators switch back in trade direction, then you have green light to enter the trade, and that's it. Also, trade entry has changed. I only use 1 position now. That's it. I don't take half profits and break even anymore. I let the trade run until it runs its course and period, done. I don't move my stop loss to break even. And the reason for that, I can show you that on gold, why I did that. That happened, let me find, I'm not sure if it was last week or the week before, but I'll show you. Was it before? No. No. Okay, we're in the previous week now. Here, that's where it happened. So let me show you that. We are in the London session. Like I said, band comes out of the green band comes out of the purple band, and then we get our first white arrow here. That's the first thing we're waiting on, and now we're waiting for the 4 indicators here to flip green, which did happen right on this big candle. In this case, this actually flipped with 1 bar. That's fine. So this was your entry. You take an entry and then stop loss right underneath, and off we go. However, before this trade actually ran its course, which the minimum would have been exit on this candle here, you see this pullback here, and look where it came into, right where the entry was. So if you let the trade run up a little bit and then set your stop loss to break even, this move down would have taken you out. And again, you got to learn how to accept losses. It is what it is. So if you do not move your stop loss to break even, you're actually able to ride it up to at least here, and that would have been a 157 pip move. And you don't want to sit through all of this, which is probably a few hours, just to get stopped out at the end when it finally makes that move up. So I changed my rules and said, okay, from now on I take 1 position and I ride it out until I get to my profit target, which the minimum profit target, we go over that now, would have been when this candle closed outside here. And I explain that in a second. So only 1 position, stop loss, again, underneath, above support resistance starts, or underneath, above last low high, when it is secondary entry. So sometimes you do not get the support and resistance starts, so you just use the high or low. That's completely fine. And then we risk 0.25 per entry on prop firm challenges, or 1 to 2% on private accounts. On my private account, since I use 4 times the risk, I use 1% now. And you can, whatever your risk tolerance allows. If you get comfortable with it and you see the success of this template and that strategy, then by all means, if you want to go nuts, knock yourself out. That's on you. You're the master of your own money. So, and again, for me to make it easier on the challenge, I use 0.01 per 1,000 account balance, and I actually doubled that. I'm gonna double that next week because I'm that confident and I want to pass those challenges next week. I use 0.01 per 500 account balance. So if you look here, my trade size now is 1.02 because I have 51,000 in the account. So I raised it to 1.02 starting next week. And every 500 I raise it by 0.01. That's an easier method. These are the 4 pairs that I'm trading right now. Gold, GBP USD, AUD USD, Aussie USD, and Euro USD. Because you have higher stop losses on gold, but you have higher stop losses on gold and GBP USD, but you have really small stop losses on Aussie dollar and Euro dollar. I decided to just average it out. So between all 4 of those, it usually comes out to 0.25 average per trade. It's a little bit higher on gold and GBP USD, but it's a lot less on Aussie USD and Euro USD. So that's how I average it out. But like I said, me personally, I'm gonna actually try 0.01 per 500 next week and see how it works out. Okay, trade management, very simple. Close your position earliest when the green band comes out of the purple band on the opposite side and a candle closes outside of both bands. That's your minimum exit. Latest, and that is the thing that allows you to take the whole move, when the bottom indicator, the last bottom indicator, turns white, and then we get that same condition where the band comes out and the candle closes outside, or a reversed entry signal if you want to wait for that. You can do that as well, but for me, once that turns white and the band comes out and I get a candle close outside, that's where I close my trade latest. So let me explain that on gold again. So we had our entry, oh, that was Friday. Yeah, that was the example we were talking about. So the second entry here, the first got stopped out, we're in the trade, and now price moves down. As price moves down, you're gonna see this indicator turning full on red. If that happens, all you have to look at, you don't look at price anymore, you look at this indicator. Minimize the candles, whatever you need to do. All you have to do is look at this bottom indicator, and you wait, and you wait, and you wait, and you wait. And this indicator actually started turning white right here. It paints back a little bit. So right around here we got the first white bar, and we have the band already outside of the purple band. So now all you have to do is wait for a candle to close outside, and this happens right here, and that's your exit. That's the latest you take a profit. And as you can see, it was not far off of the bottom here. It was like 13 pips to the actual end of the move. But like I said, this is a pretty good method to actually stay in the trade and go through those stages. Gold loves to do that. Gives you a nice move, and then it just goes sideways, consolidates, and then it moves up. And this is all constructed to get you out of the trade, to scare you out. But if you follow my method and you concentrate only on the bottom indicator, and you follow that indicator and that indicator alone, you don't even look at the chart. All you have to do is you wait and wait and wait and wait, and then, like I said, right around here it started turning white. And then you look up, that's when you look at the chart again, and you see that the band already came out, and then price comes down, closes outside, and that's the end of the trade, done. So that allows you to take the whole move down, even through that up and down, up and down, up and down. And that helps with your psychology too. If you just keep an eye on the bottom indicator, perfect. Now again, I took early profit because I was up 3.6% on the account. I was like, this is a good day for me, so I just called it and closed it. But you could have made a good amount of money on this trade. If you, like I said, I'm using 1.02 lots right now, 144 pips. So just on gold alone on that day, if I would have followed my system times 1020, that move alone would have been almost 1,500 bucks. So between gold, GBP USD, and the other two, probably roughly around 3,000 on a day. So yeah, so, and I think I took double lot size on this one. That was me being angry about the stop on. That's why I closed it early. But anyway, Yeah, so this would be a full move. Once you get into the trade, you wait until the trade moves in your favor. Once it does, you're gonna see this indicator here on the bottom turn red if it's a sell, or green if it's a buy. And if that happens, all you have to do is watch this indicator, and you wait until it starts turning white, which happened here. And then you see the band is already out there, so you wait for price to come back down again, close outside, and that's when you close the trade and be done. And you can be happy about that. Let's check Friday real quick, because like I said, I didn't really trade on Friday because of NFP. But let's check GBP USD, because we had a shorter move here, and that's what I meant before. When you don't have a full move. A full move, like I said, is for me a move that pretty much goes all day until closing, or gives you a good amount of pips. So on GBP USD, we had our first, this is beginning of our session, price comes out, band comes out right here, and then we get our white arrow. That's the next thing we're waiting for. And then we wait for confirmation, which came on the next candle. When this candle closed, we had all of them green. And then if you want to, you can wait for the dot. I did not take this trade again because of NFP, but obviously you could have. And the thing is, if you have all 4 indicators agreeing before you get the support dot, then you can wait for the support dot, but you can take the trade at candle open. So on this candle, we had all confirmations, but no support dot. When the next candle opens, the support dot printed. So you could have taken the entry right there, even on opening of the candle, because we already were confirmed of the move. So you could have entered here. Then this goes underneath the support dot, stop loss. And then you can see this was a shorter move. Price comes out of on the other side, and this turned green, and then it starts turning white. So now you wait until you get a candle close outside, which happens right here, and you close your trade. And this happens to be almost the top. So you took this whole move from here to here. That would have been 78 pips. And then again, since this was a shorter move, you can take the next move if you want to, if you're still not satisfied. So again, price comes out, we get the white arrow here, so that's our first condition, or first and second condition. And then we have to wait for those indicators, the first 4, to turn red, which happened on this candle. So here's your entry, stop loss, and then it was playing around for 1 hour, and then it dropped right when the NFP news came. And then again, this turned red. So once this turns red, you don't have to look at the chart anymore. So you follow that indicator, and it turns white. And then right when it turns white, we close outside. Anywhere here, if you close the trade, perfect. You took the whole move basically. So that would have been, where was the entry? Here, from here to here. Let's say you close it right on this candle. That would be 127 pips. So on this day, if you took both moves, you would have made 78 pips going up and 128 pips going down. Simple. Okay, let me catch up with the chat. Do you care about what the indicators say in the bottom right? Okay, let me explain that, what they say in the bottom right. Like I said, for entry, from now on, we do not use the last 2 indicators anymore, because usually when you get an entry, we get a sharp move, quick move down or quick move up. And this quick move throws those bottom indicators off. It takes them a while to catch up, and then they paint back and make it look nice. But in the moment, they're not switched yet, or white, or whatever you want to call it. So I took those 2 out of the equation for entry. However, when the move then starts, it usually fizzles out, and that's when those indicators are full on caught up, basically. So when you're in the trade and you see those switching, then it's time to get out of the trade at some point. And usually I wait for the candle close outside of the band, because it always happens. And that's where I take my profit latest. The numbers here, what they mean is basically the strength of the move. So the higher this number is, the stronger the move is. And the indicator switches from red to white or green to white when this number goes below the threshold of 0.3. So this number kind of helps you to gauge how strong is the move. Are we coming down now? And this readjusts back too, so you can't really go by that, if that makes sense. So don't be too concerned with those numbers. Just look at the color. That's the easiest way, and that's psychological. It's the easiest way to stay in the trade. You just look at that bottom indicator and wait until you see white. And then when you see white, wherever you want to close it, that's fine. If it's on the first bar that is white, close it there. If it makes you feel better, that's fine too. I usually wait for the close outside of the green band because that always happens. Kind of. Not always. But like I said, wherever you feel comfortable. I personally, and this is just how I'm going to trade next week, because I'm using a higher lot size and I'm not taking partial profits, I have decided to close my trades whenever I hit 3% on the account. That's my plan going forward next week. Once I hit 3%, I'm out. And I'm still going to leave a lot of money on the table, and I understand that. But once I hit 3% on the account, I'm out. And my friend Thiago, that helped me before with indicators, actually wrote me a little EA. It's nothing fancy. It's close all by profit. And you can see it's set to close all trades at 0.031. That is 3.1%. The reason why I set it to 3.1 is because 3% is really the low-hanging fruit with the strategy and the lot size that I'm trading. Usually, if you have a good day, you can make 2% on each move. So that will equal out to about 8% on the account. But like I said, I'm not greedy. When I did my challenge, I actually took profit at 1% on the account every day. And then again, within 2 weeks, I was through. Sometimes I let it run a little bit and made a little bit more. But usually at around 1%, I closed out and walked away, and that's it. And that worked for me. I was happy with it. I knew I left money on the table, and I knew there was more profits to be made. But I was happy with 1% because it was a challenge. And then I walked away. Not always, like I said, sometimes I let it run. That's how I was able to pass phase 1 and phase 2 in 2 weeks. But that was literally the best result after 2 weeks that I ever had in my trading. Those 2 weeks that I did the 100K challenge. And I think I showed you that before from the channel. I'm not even sure if it's still in there. Let me check. Because they tend to... Oh, I gotta log in again. Great. They tend to erase the challenge accounts once you're done. Is that... Oh, I have to log in again. Okay, let me see this. There we go. This might... Nah, they already erased the stats. They do that. Like I said, once you have your account funded and you start trading, at some point they erase the challenge accounts. I don't know why they do that, but I can't show you. But I showed you that before in, I think, the last videos, in one of my last videos. It was a steady up, day by day, steady up right until profit target, and then verification, steady up right until profit target, done. And that was with 1% on the day and close everything. Now, since I doubled my lot size basically, and knowing how far those trades usually run, I set my target on the day for 3%. Because I want to make some money on those funded accounts. So 3%, and that's still the low-hanging fruit with that strategy and the lot size that I'm using right now. Like I said, if you use 0.01 per 1,000 on 4 trades, you should reach right around 6 to 8% on the day. You'll be able to reach that on the day. And 3% is really the low-hanging fruit. And I'm going to try it this week, 3%, and then I'll walk away. And this EA will close those trades at 3%. Well, I set it at 3.1% because sometimes it fluctuates a little bit. And then by the time all the trades are closed through the EA, it might pull back a little bit. So I set it to 3.1% to hopefully have an average of 3% with the slippage and everything. And yeah, he wrote that EA for me. He actually told me that he's gonna change it, because right now the way it works is just on the open trades at the moment. And I asked him to change that to 3% on the day. That when you have like a short move like that, and then you have a longer move, that it will take that already closed trade into consideration with the 3% on the day. So he said that would be easy, and he will have it ready today. And then what the EA does is basically every day at 5 p.m. when the new trading day starts, it resets the value and recalculates the 3.1% on the day on the account. And then it takes all trades into consideration that day, even if they're closed already. And whenever you hit the 3% on the day, the EA will close all trades in that moment. And then when that happens, I'm happy and I will walk away. So that's my strategy for next week. So hopefully, if you have 3% a day, and I'm not even considering compounding right now, but let's say 3% on 50,000 and 100,000, that's 1,500 a day times 5. So no, not 1,500. 1,500 on the small account, 1,500 on the 50. Yeah, that would be 1,500 plus 3,000 on a 100K account. So that would be 4,500 a day. And if you take that times 5, hopefully, that would be 22,500. I'm happy with that. I don't need more than that. So I set it to 3%. I'm gonna see how it works this week, and hopefully I will make it up to right around 20K. I would be happy with the 3,000 I already have. That would be a nice payout. Well, I only get the payout from the 50K account. The 100K account I have to wait until the end of the month, because the first time you have to wait 30 days to get your first payout. But I mean, I will eventually get that money as well. So that's my plan going forward. 3% on the day, close the trades, walk away. I'm happy. Now, if I see a trade that goes smoothly, I don't know, maybe I'm tempted to leave it open and actually test the theory out with the bottom indicator. I know it works, but sometimes it flips late. So you can see here, for example, and this usually prints back, so you would have gotten your exit signal somewhere around here. Still not a bad trade if you look at this. But if I reach 3% on the day, I'm more than happy. I walk away. That's a good amount of money, and if you compound that, let's see. I have a compound something. Where is it? Where's it? Here, compound daily. Let's do the math here. So let's say 150K and daily 3%, and let's do 30 days. This is a crypto one, so I have to change it to 100% and do not include weekends, because we don't trade on the weekend. And just to show you, with compounding, my net profit would be 214,000 on a month. So that would be more than 100% on the account, because 100% on the account is 150K. So if I can make 214,000 in profits with 3% every day, I'm more than happy. I don't need more than that. So there's no reason to overtrade or stay in the trade longer than you need. I actually will do it in a way, because I know myself. My head is gonna mess with me. The way I'm gonna trade this is, when I get a valid entry, I wait until it actually starts moving down. So let's say we create a lower low and then a lower high, and at that point, when it creates another lower low, I will walk away. I have my stop loss in place. My EA is watching the trades, and my EA will close those trades when I hit 3%. So as soon as I see that, just making sure I'm not getting stopped out and I have to re-enter. If I see that first lower low and then lower high and then that last lower low breaking, right at that point when this candle closes, I would walk away from the screen. Let the EA do the rest, and close all the trades when I hit 3%. That's it. That way I don't have to watch it. I have a short trading time, so on the Euro USD we would have had the entry right on this candle here. So you enter, you put your stop loss up here, and then from here to this candle, that's 28 candles. Let's see, times 5, not taking into consideration that you have to wait for the entry. That's probably another hour until you got that entry, but the trade time, that would be 140 minutes. That's a little bit over 2 hours. So when a candle closes, I'm about, what, 1, 2, 3, 3.5, 4 hours in. You know, I see this happening, I walk away. That's it. So I worked for, let's say, a 4-hour window, and then I'm done for the day. And I just let the, you know, the strategy do its thing until my EA says, okay, that's it. We're at 3%. Let's close everything out. Done. So that's my plan going forward next week. 3%. That's it. I'm happy walking away. And I'm not even going to look at the chart anymore. As soon as I'm sure that it will not come back and I see some bearish structure forming and confirming with a break of a lower low, that's when I walk away. And just let the A do its thing. And again, if I only take 3% on a day, even without compounding, I should be able to make 20K on the week. And that's more than enough for me. All right, so this is my strategy going into next week. Plan going forward, I will continue to add more prop firm accounts with my next payout, which I said is next Friday, but that's only going to be my 50K account since my 100K account is not at the 30-day mark. So that would be 3% would be 1,500 times hopefully 5. Let's say 7K roughly. Profit split is, now I don't know if I get the point, if I get 85% yet or not. I think it goes by month. So let's say I only get the 80%, which I got last time, times 0.8. So it would be roughly 6,000 payout again on the 50K account. And I'm going to use that money to purchase the E8 funding accounts, so that they allow you to have one 250K account and the E8 elevated account, which is a 100K account. That's the max they give you. The reason is I like their scaling model. The scaling model is whatever you make in profits on the month, you get your payout and your profit split, and then they put the money back into the account and you have a higher starting balance for the next month. So that's on their regular account. So what that means is basically I'm going for the 250K account, which is the regular two-phase. I think they're both two phases, but that's the regular standard account. Let's put it that way. I don't know exactly how they call it. So I'm going for the 250K. If I pass the challenge, and let's say I make 10% profit on the month, that's 25,000. So then they would give me a profit split. I think the profit split is 80%. So they give you 80% of the 25,000, pay you out, and then they put 25,000 on top back into the account. So now you're starting your next month with 275,000. That's their scaling model. So whatever you make in profits, they're going to pay out and then put back into the account. So you start with a higher account the next month. I like that. That's an easy scaling up model. And then the elevated account is even more interesting. Each month where you make 16% profit, and so far I made 10% in 2 weeks average in profits. So I should be able to hit that with 20% on a month. Like I said, they require 16% on a month. Each month where you have 16% on the account, they will give you 100,000 for the next month on top. So the first month you hit 16%, they give you another 100K. Now you start with 200,000, and then you hit 16%. Now you start with 300,000, and so on. and they do it up to 1 million. Million is the cap. So that's gonna be my next. As soon as I get my payout from my 50K account, I'm gonna sign up for those 2 challenges, and then actually, yeah, and I think I'm gonna sign up for the funded trader as well, and do whatever max they allow me. I think with them it's 400K, if I'm not mistaken. Because I like the funded trader, I like the guy that is partial owner. I follow him on YouTube. He seems like a nice guy. He reviews all kinds of prop firms out there and gives his opinion on it. And he's partially connected to the funded trader. And I think they're doing a great job. I think they're legit. So I think that's going to be my next prop firm that I'm going to attack. And if I do get a $6,000 payout, then I can buy the 2 E8 funding accounts and 1 or 2 whatever I need to buy on the funded trader, and add them to the portfolio basically. I hope my computer will play along nicely. So far it did, with 1, 2, 3, 4, 5, 6, 7, 8 open MT4 terminals. Thank God I have a newer computer, so it works fine. At some point I probably have to switch to Social Trader. But for now it works on my computer locally, and it's faster than connecting to a website on the internet. It's pretty much instantly. Whenever I open a trade on one, it will be copied instantly over to all the other accounts that I'm trading at the same time. We'll see how it goes. Whenever I reach my limit and my computer starts bogging down, then I might have to switch over to Social Trader or something like that. But for now it works locally, and I will combine the 100K, the 200Ks on my Forex fund and the 50K into one big account. So I will have a 300K account, a 250K account, and a 50K account. I'm going to keep that separate, again, for reasons I explained previously. And that should bring it down to 1, 2, 3 instead of 5 that I have right now. So then I have 3, 4, 5, 6 with FTMO, then the 2 E8, so that brings it back to 8, and then 1 or 2 on the funded trader. I think they have a 400K challenge, if I'm not mistaken, so they might just add another one. So technically I'm only going to add one more MT4 terminal with that, so I should be able to do that. And then going to add those challenges hopefully next weekend, or whenever I get my payout. So it's going to be probably the week after, because it always takes a few days for the money to hit the deal account, and then it takes a few days to get into my bank account. So I think the last time, all in all, it took 4 days or 5 days to get my payout from my Forex funds. So whenever that money hits the account, I'm going to sign up for those challenges as well and add them. Hopefully I'm in phase 2 with all the other challenges that I'm doing right now. And then, yeah, that's plan going forward. Do you care about, would you go for 5%? Yes, actually 5% is on my list, but since their profit split in the beginning is not that high, they're kind of like low priority, but they are on my list because they are established. They have a long history of existing and paying out, so I'm definitely going to add them. Especially because of their scaling model, and they will go up in profit split as you go up in scaling. So, and again, it doesn't hurt me. You know, I'm trading one account regardless. So if I add the 5%ers to the portfolio, it's not going to hurt me. I'm still going to do my thing every day, the same way I did it before, and just build those accounts up over time. So yes, I'm definitely interested in the 5%ers. Because I think they have a good reputation, and I haven't heard any issues with payouts with them. So they're definitely on my list, just very low priority because of the 50% profit split in the beginning. But at some point, yes, I will add them. And yeah, at some point I guess I have to switch to Social Trader. I don't know. I have to see. There is a way to actually use the trade copier that I have right now to connect to a VPS, and on the VPS I have a pretty good package that I use for one of my EAs that I'm running right now. And there's plenty of room on that. I think I can have 8 or 10 MT4s on that VPS running simultaneously, especially when you don't use any indicators. It's just a trade copier EA and nothing else runs on it, which does the most that use your CPU power or resources and memory is if you use indicators. Each indicator blows that demand up exponentially. So if you only use an EA and just one chart per terminal, I should be able to get about 8, maybe 10 MT4 terminals on that one. I gotta see how that works and maybe test it out one day. But I think it's just easier at some point to, sign up for a social trader. I think their fees are reasonable. Let me check. I'm just going to the website real quick. I don't want to say anything wrong here. Social trader. Yeah, that one. Yeah, except let's see the pricing. So yeah, let's say I get the premium package up to 20 accounts, which at that point I'll probably need. That's $220 a month. But I mean, if I can make, if I'm funded for, let's say, $1.5 million at that point, hopefully, and I make 20% a month, which is roughly what it comes out with that strategy. So 1 times 0.2, that's $300,000 a month. So the 220 is worth it. And then I can connect it to that, and then that way I only have to run one MT4 terminal on my computer, and then this website will copy all the trades over. Now, it's probably not going to be instantly. There might be a little bit of a delay because it goes over the internet and then back to all the other MT4, and they also have MT5. You can connect them directly to Social Trader, and you don't have to run the MT4 terminals for all the accounts on your local computer. So at some point I'm probably going to make that switch where I'm just getting the premium package, and then I have up to 20 accounts that I can link to my MT4, and then I don't have to have all those MT4 or MT5 terminals depending on the prop firm. I don't have to have that open on my computer. All I have is one MT4, and then that website is going to copy all those trades over. I actually do have my small account linked up to my what is it, my FX book? Yeah, this one actually reports to my FX book. Now, given I just was able to do that a few days ago, so but I might once that develops. Right now it's just a break even because I started that account with 500, and then I was just fooling around with it, and it goes down a little bit and up a little bit and down a little bit and up, and so right now it's close to break even, which was 500. Once I see an upward curve developing, then I have no problem sharing that my FX book publicly. Right now it's just a mess. It's up and down and up and down. So let me see how that develops, and if I see a nice curve going up, hopefully, then I will share that as well, which will reflect whatever I trade on my challenge accounts or funded accounts, hopefully at some point, just with more risk. So, I mean, I can show it to you right now. Let's see. So I have a few on there. Small account. Yeah, you can see this is a mess right now. And you can see I started the account with 500. That was a while ago. That was in June. And again, I was just messing around with it. That was me trying to figure out the strategy and my rules and psychology. And this here, October 5th, No, here, that's when it started. September 30th. That's when I connected it to my challenge accounts, and that's the results so far. I think, oh no, it started earlier. 26. Oh, September 26th. That's when it basically started again. And you gotta take it from there. Everything before was just fooling around pretty much. And you can see I'm almost back at break even now. And I just switched it to 4 times the risk. It was at 2 times the risk before. So, what is that? September, what do we say? September 26th. So let me switch it to custom analysis from that day. So 26, that's when I started. I mean, started again. Not started, but started again. So this is the profit curve with twice the risk that I take on my challenge account so far. And there was a couple of days where it wouldn't take trades, and because of the lot size being so low in comparison to the big account, it would only take 0.01 trade. And before I had that mentality where I closed half of my position at a certain point and put my stop loss to break even, and because it only had 0.01 to work with, it just closed the trade. So this is not the real result that I had on my trading account. I hope that makes sense. Like I said, it was just using 0.01 because the account was so small, and whenever I closed a half position, it would close the whole trade because it only had 0.01, and then give me an error message later on when I closed the rest of my trade saying that there's no trade there to close. So this is not really a reflection of my prop firm trading. That's like half, basically. You could say half of what actually happened. And it's also not going all the way back to when I started the 50K account. But like I said, I have this, why is this not verified? I can work on that and make this verified. But I have this, and I have no problem making this public. The reason why I don't want to mess with my FX book on the actual funded accounts is because they do not allow you to change any password. And honestly, I don't feel comfortable with it. On my small account, I don't mind, but I don't trust anybody, to be completely honest with you. They have basically because I cannot change the read-write password, I would have to use a master password on the account to actually connect it to my FX book, and I do not feel comfortable doing that. Giving them basically the master password on the account. That, like I said, there's so many data breaches all over the place. Binance just had another breach where they stole, I think, like 500 something million in cryptocurrency and whatnot. I just don't trust giving the full password to my FX book, and that would be the only way for me to connect the account and verify it, because I cannot change the read-write password because the prop firms don't allow you to do it. You can actually lose your account over that because they need full access to your account. And again, I don't feel comfortable giving my FX book my full password or master password on the account, because then they have full access to the account, and I don't like that. But I will have this, like I said, this is connected to my own account. This is made with a read-write, only read password, so I feel comfortable having that. And as this develops, again, I have no problem sharing that publicly. I would have to get that track record verified here, but I should be able to do that. I don't even know why it's not saying verified. But I can look into that and make it verified, and then I should be able to set that public, and I can at least link that to my videos so you can keep an eye on that in the future when it's public. I will do to finish that today. Hopefully I can do that. I have a lot of plans for the afternoon. But at some point by tomorrow I should be able to actually verify that account, and then I make it public and share it with my videos. Then you can follow along. Just keep in mind that on this account, starting next week, not before, but starting this week, I will use 4 times the risk that I use on my challenge accounts. So whatever you see here is 4 times higher starting next week than what it is on my actual challenge accounts. Just keep that in mind. Um, yeah. So this is the actual results since I started trading this account again, and that was traded with my challenge accounts at the same time. You can see last week I had the first 2 days were not so good, and then I caught up towards Wednesday, Thursday, Friday. Friday just a quick scalp, and that was it. That's exactly what I did last week, right here. Like I said, in the beginning it dipped down a little bit, and then again, luckily, I think I started connecting the accounts right after that day. So my new challenge accounts were not affected by the drawdown in the beginning. I locked out on that one, and then it was steady up. Okay. Any concerns about social trader copying your trades to their own accounts? Personally, I think VPS local copy is the way to go. Are they doing that? They copy those trades? I don't know if they do that. I think you have to give your okay in order for them to allow other people to copy your trades. I have to look into it. Like I said, right now it's working on my computer locally, so I didn't really look into it. I just know that Social Trader exists because I saw it in a couple of prop firm videos on YouTube, and I watch a lot of YouTube. So I only know it exists. I didn't really look into it. I have to see what it is, but I think in order for them to be able to copy your trades, you would have to give your okay and make your account or trades public to them or whoever connects to the account, if anything, I would imagine. So I don't think they can just copy anyone's trades. You can get a great spec VPS for 100 per month. Yeah, I have actually a pretty beefy VPS, and it's already prepaid for the next year and a half. It's a 2-year package that I bought, so it gives you a lot of discount if you pay for 2 years in advance. And I think I can have up to 10 terminals on that one, if I'm not mistaken. Maybe even a little bit more, because literally all I'm using is the EA to copy the trades, so there's no indicators running or anything. So I might be able to even have more terminals. That, like I said, that's a alternative. I have to look into that. I should be able to make that work. I come actually from IT field. Network administration was my specialty, so I might be able to set that up. I think it's possible with the FX Blue trade copier, but I have to look into it. Like I said, right now it works locally, so I don't even bother and I'm not concerned with it. Once I run into that issue, then I'll deal with it. How long have you been in Forex? Good question. I started. Okay, so this is my journey. How I got into trading. Actually, I got into investing first because I was like, okay, I gotta do something for my future and retirement. And I never saved any money. I'm one of those stupid people that just never thought about the future. So a few years back, in 2016, I took a break from Facebook because there was so much political stuff going on with the Trump election and whatnot, and I was like, I don't want to see that anymore. So I literally like deactivated my account for the time being, and I was off of Facebook for 3 months, which was a habit of me being on Facebook all day. And in that moment, like I said, I started investing a year and a half prior to that, and I invested in ETF funds and stuff like that, and they gave decent returns for me at the time, which was around 12% a year, compared to banks that give you not even 1% on the year at the moment. So I was like, okay, this is pretty cool, that works. And then I looked into it. I'm like, I wonder how they make 11% when the bank only gives you 0.5% or whatever it is. I don't even know. I wonder how they do that. And then I looked into it. what's behind an ETF and how do those investment companies work and what are they doing to give you that kind of return and whatnot. And found out, yeah, they're day trading your money basically as well. But, specialists. So I was like, okay, trading money. So let me find out about that. So I looked into that, and then I found out about, first I dove into stock trading. I started learning about stock trading, and when I thought I was ready, I started with a small account, and I had some results in the beginning. But then I had huge losses again, and it was always a back and forth. So in the beginning, I lost more than I basically made. Obviously, I think everyone does it, and I made that stupid mistake to start with a real account, not with a demo account, because I'm stubborn like that. And anyway, so long story short, stocks didn't work out for me. Also because of the time. I have a company. We run karaoke shows here in the area, and due to that, I never came home until like 2-3 a.m. in the morning, sometimes even later. And then you had to be at the computer at around 8:30, which is like an hour before the market opens, and then you have to do your analysis on the stocks and find gappers and whatnot, and the whole process. But you need about an hour to do your research before the market actually opens. And so I only got like 2, 3, 4 hours of sleep every day. And that messed with my mentality too. So I was not really in a situation where I should have traded. But that was stock market. And that played a role in it. And like I said, my own stupidness played a role in it too, but stupidity played a role in it. But that was a big factor of me basically not being very good at it. And I just, after I had a really big loss and almost lost my whole account, I took a break, and I was like, all right, I need to take a break, take a step back and reevaluate what I'm doing here. And then I found cryptocurrency, because cryptocurrency, you can trade 24/7. So I was like, okay, this is more my thing. I can trade whenever I feel like it, and when I'm in a good position, and I can take a good sleep before I start trading and be refreshed at the chart and whatnot. And I started with cryptocurrency, and that was right at the peak of Bitcoin in 2017. So right around when it was like 19K, I started buying Bitcoin so I can actually trade cryptocurrency. And then even though I made some profits, because Bitcoin basically dumped right afterwards down to 3K, I lost a lot of money yet again, just in value. And I call it quits with cryptocurrency, because some coins that I traded, I actually used a robot to trade cryptocurrency, and that robot just held the bag and then added on and averaged in basically until that coin recovered. But since everything went to shits basically, I don't know any other way to say that, some coins just never recovered and went to zero, so I lost a lot of money on that. So I was like, all right, cryptocurrency is not the way to go. And then one of the people that I met in one of those cryptocurrency trading rooms told me about Forex, and I was like, okay. So I looked into Forex, and that's how I ended up in trading Forex, and that started in I think the end of 2017. Yeah, the end of 2017, that's when I got into Forex. And again, the usual, lost more than I made. And then I tried to get my shit together, and I was like, okay, I need a trading plan. I need to sit down, write down rules, and I need to follow those rules, and that's the only way to go. And I found different strategies, but I didn't like any of them. I couldn't identify with it. So I finally said to myself, I said, okay, you're a smart cookie, you can figure something out yourself. So that's when I started with indicators, and I went through, I don't know, probably at least 3,000 different indicators. And I tried to find something that works for me, that I understand and that I can process and I can stand behind, and that's how I started that strategy that you see today. So that was, like I said, that was a year of trying other strategies and whatnot, and maybe a year and a half. So by mid 2018, yeah, mid 20. Wow, it's longer than I thought. I thought it was 2 years ago. Yeah, mid 2018. That's when I started working on my own strategy, and the result is what you see today. So that's a good three and a half years in the making. And I always tried the free trial from FTMO because that was my big goal, to actually accumulate funds to trade with quicker. The prop firms and FTMO was big, started to become big, and everybody was talking about it. I'm like, hey, this is perfect. Pass the challenge, get funded, have a good trading capital, and then fund your own trading account with it. So I started one free trial after the other, and it kept failing and failing and failing. And I just kept working on my strategy and my template. And then at some point I saw results, and all of a sudden I went from losing money to break even. I was like, okay, that's a good step forward. I mean, it's not optimal, but at least I'm not losing money anymore. That's good. And then I kept trying the free trial, and failed and failed and failed and failed. And I readjusted my template, readjusted the indicators, threw away what didn't work, added what I thought might work, and so on. And it was basically a change, try again, and see if it sticks process. And then once I got to the bands, I think I picked it up through there's one robot out there that trades Forex that way. I think that's where I picked the idea up with those bands. And I was like, okay, that makes sense to me. And he even explained why. It's like they're basically based on ATR, and they calculate the average ATR on different time frames. And then when both of those go to an extreme, which is basically when that green band comes out of the purple band, that's what it basically is, an extreme. That's usually a good indication that it will turn around. Not always. Sometimes they keep running. So I had to come up with an idea to basically pinpoint where it's finally ending and then turning around and moving the other way. So it's a very simple strategy, if you want to call it, or it's all based on ATR basically. So the only thing I had a problem with was pinpointing where the turnaround point is. And then also I found out about the time factor, which is very important, because that strategy only creates extreme points when you have a lot of volume, and that's London session, hands down. So that's why it works in the beginning of London session the best, or right before London session, because that's when all the volatility comes into the market, and that's when all the indicators are caught up and have a fresh start, and basically give you that pinpoint accuracy to enter trades. The later it gets into the day, the less accurate those indicators get. It's good enough to follow them to your exit point, but again, after 11 a.m. I would not take a trade. Heck, after 7 I would not take a trade anymore. Sometimes, I mean, if it's clear, by all means. If you're still awake and you money hungry, go for it. But usually you take one trade a day, and you have 4 pairs that you trade on. Since the USD pairs usually run very aligned with each other, not always, but gold and GBP USD, AUD USD, and Euro USD, they usually run kind of the same way. So you kind of split your risk on 4 trades, even though they all move the same way, but you don't get a stop hunt on all of them. That's why I split it between a few pairs that move simultaneously. So hopefully I get into the trade and out of the trade at the same time. And you don't get a stop hunt on all of them every day. So when I got stopped out of gold, by all the other pairs I was still in the trade, and then I just re-entered gold when it was ready to re-enter, and wrote it down for 3.6% on the day in profit, and then I called it a day. Done. But yeah, so that's my journey. And I started a YouTube channel when I thought I was ready a year ago. And I started failing, and then I took a break again. I mean, you know that story. And I took a long break and finally found something that worked. And then I took another trial and I passed. And then I took another trial and I passed again. And then I tried it again and I failed again. So I took the real challenge and then I failed again, took another challenge, real challenge this time, and failed again. And then the third one was the one that actually stuck. So the third one I finally passed. And like I said, the difference between failing and passing the challenge, basically making a jump from break-even trader or worse to actually making profits, for me personally was the realization that I need to accept my losses. I have a clear entry point, I have a clear stop loss point with that strategy, and I need to follow that trading plan. And if I get stopped out, then I wait for a re-entry if it presents itself, and if not, that's what it is. And I will not do more than 4 losses a day, which with 0.25% risk is exactly 1% on the account, and that's it. And that worked. And then I finally passed the 50K. There was still a little bit of luck involved, I'm not gonna lie. But then when I did the 100K challenge, I was like, okay, things are getting serious now. I need to stick to my trading plan. And that was the best trading I ever did in the whole time that I'm involved with trading. And I passed it with flying colors within 2 weeks. And every day was profitable. And I was like, okay, this is the way to go. And that was with taking losses. And I showed that before. I had quite a few losses in there too, but I still ended the day on 1% profit every day. And that's how I passed the 100K challenge in 2 weeks. And I was like, okay, this is the way to go. Perfect. And now I'm just basically fine-tuning and see how I can get maybe a little bit more profit out of it. And that's what I'm trying next week. I'm going to raise it to 3% on the day. And I think it should be the low-hanging fruit with that strategy on 4 pairs, taking 1 trade on each, given that is the case. Sometimes you don't get a trade on all of them, but that's what I'm trying next week, see how it goes. Will you be live for the Monday London session? Yeah, I can go live. I don't see why not. It always holds me a little bit accountable too, if I'm trading publicly, to be honest with you. Keeps me in check. Yeah, I can do a live session on Monday. Why not? I'm not going to do a live session every day because honestly, I do trade better when I'm not live trading. I don't know why. But yeah, let's do a live session on Monday. That's fine. And also, I learned, that was another thing that I learned, I forgot to mention it. If I don't see a clear setup, then I don't trade. I don't mind sitting on my hands sometimes. So I had to learn that too. If the market is just messy or moving sideways and nothing is really developing, then I just call it a day and walk away. That's fine. I don't need to have a trade every day, especially not with a strategy. It's fine. Oh yeah, there was something else I wanted to point out. So, as I mentioned in the rules, the first condition that we have to have is the green band coming out of the purple band. Like it does, let me zoom in again. Like it does here, at this point, or here, at this point. And that usually happens during London session because London session is very volatile and they like to produce fake out moves and whatnot. And I take advantage of that with a strategy. However, and there is an exception of the rule, and I have to point that out. First of all, again, every indicator you see is repainting or recalculating. I like to call it recalculating. That includes the bands. And now I want to show you something, and I actually marked it down on GBP USD. Let me zoom out a little bit. I know I'll put a marker on there somewhere. Give me a second. There it is. There's an exception to the rule. Ah, really? Let me go back. Sorry. I know some people get dizzy from scrolling. Yeah, okay, so on this day, that's the day that I wanted to discuss, which is an exception. Okay. So because those bands are recalculating, at the time when we were here, this green band actually came out of the purple band at the time. Once that moved down, came in, that's when that band recalculated, and now it looks like this was not a valid setup. But I can guarantee you at the time when this happened, this was a valid setup, because I remember that trading day. So at the time, the green band actually did cross out of the purple band, and we got a white arrow, and we got the confirmations right here, and I did take this trade. At that point, I was using a different setup with a even bigger time frame band, the 1 hour band, which was the gray band and whatnot, and everything looked good. This was outside of the purple band, it was outside of the gray band, and it followed my rules, and I got my white arrow, I got my support dots, and I got my confirmation down here, and I entered the trade right here. And my rules before were, whenever I get an arrow going the other way, and I get those starting to flip red against me, I would set my stop loss to break even. And then I wait for re-entry going up again. But in this case, this did not happen. So don't be fixated with the green band coming out of the purple band, because they do recalculate. So what I, after this experience, and especially moving out on, losing out on that move, which was like almost 400 pips down, even more. It was 450 pips that day. That was when GBP just basically hit the low, when it just collapsed. Because of that, first of all, that was the reason why I got rid of the 1 hour band, so we don't have that anymore, it's just those two. But also don't be too fixated on the bands and thinking, okay, it's gonna turn around, or even worse, don't let it hit your stop loss or break even or whatever, because you would have lost your account with that move down. There was no way to recover that. That's another reason why you should always use a stop loss, worst case scenario. But I did set my stop loss to break even when I got those indication that it might come back again. I thought it was just another comeback and then it will continue up. So I was like, let it hit my break even, and I re-enter when I get that signal to go up. But that never happened. It just went straight down. So let that be a lesson, that when you get all the entry conditions going against you, then by all means close your trade and go the other way. Screw the bands, basically. So in this case, when first of all you get your white arrow going the other way, okay, then you look down and this band was red, or started turning red. This started turning red, and then those starts turning red. So latest here, you gotta be smart and say, okay, I got all indication, or latest when that resistance dot prints here, when that dot prints, and you have all the indication that we're going down, then by all means close your trade, your buy that you had in here before. You gotta keep an eye on those indicators. Close your trade. Doesn't matter if you're in profit or loss. You probably took a small hit on that, which is like 10 pips or something like that. So it's not a big deal. And then by all means take the trade going the other way, because the white arrow and all those indicators override the bands. Just keep that in mind. So always keep an eye on everything, what's going on down here. And if you see this developing where everything turns red, you're not going the right way when you buy. So always keep an eye, and when you get all confirmations that we're going down, then by all means close your buy position, take a sell position, and then, you know, take that trade down. And I want to show you another exception to that, and that was on gold. I don't think I put a mark in there, so let me find that day real quick. That was fine. That was fine. That was fine. There was one day where the band did not come out of the bigger band, so to speak. The green band did not come out of the purple band, but I took the trade anyway. Let me show you. I'm trying to find it. It's been that long. No, that was not it. I'm trying to find it. Bear with me for a second. No, that was not it. Where was it? No, that was not it. But that's a good example for a pullback entry. So we see the market. Let me show you this for the pullback entry. You see the market starts here and actually starts moving up, but we never get all conditions met. However, price then comes out, pulls back, and you can see even the fifth indicator flips over, but everything goes back to green right here. So you could take that pullback entry, you even have support dots here, and then take that trade. So that would be a pullback entry. That's allowed now, because otherwise you would not get into a trade here. But there was something else I wanted to show you. Was it on gold? Hold on, maybe it was on GBP USD. Maybe I'm getting confused here. Let me just check. It was not that long back. Ah, there it is. Yes, it was on GBP USD. Okay, let me zoom in. So on this day, even recalculated, you can see that the green band did not come out of the purple band at any point. Even recalculated, it doesn't come out. However, latest at this point, let me put a line here. Latest here, you could have entered that trade. And let me explain. When all indicators show green, and you do not get a band coming out, but you had a white arrow and you get all green on the indicators, then by all means take the trade. The band coming out of the other band is for extreme cases, which usually happen when you have a lot of volume coming in, and especially when London session makes a fake move. That's what it's based on. However, sometimes they don't do that. So don't take the green band and the purple band written in stone, and it has to be that trade. You got to keep an eye on all those indicators, and when they all agree, buy, then by all means buy. It's fine. Like I said, here at no point did the green band ever come out of the purple band. Even after it's recalculated, it doesn't show it at all. It didn't come out. But at this point, we had green throughout, so you could take an entry here. You got support dots here, and then by all means take that trade, and it would have worked out. You can see that there was 270 plus pips on that day. So just keep that in the back of your head, that you do not always get that band coming out of the purple band, even though I'm the same way. I look for that. That's my first warning sign or alert, where I keep a closer eye on a pair. But also at the same time, that's another reason why I say that always keep an eye on the bottom indicators. If they all tell you it's going the other way when you're in a buy trade and it shows that that everything turns red, then you're probably in the wrong way. Then close your trade and take the sell position instead, or close the trade and take the buy position, whatever position you're in, and ride that train, because those indicators are right, and then the picture that the band's paint is wrong. I hope that makes sense. So like I said, a perfect day is something like this here. This is a perfect day. Let me zoom in on this one. So right at the beginning of the session, the band comes out, we have support dots, we get the arrow, and then right here we get the entry signal, take the trade, and then off we go. Yeah, it pulls back a little bit and tries to stop you out and scare you out, whatever. Just stay in. All you concentrate is the bottom indicator. It finally starts turning white. It was probably right around here. And then here we close outside. If you take your profit here, that's a good trade. That's 80 pips. On one lot, that's 800 bucks. It's fine. This is a nice trade, and then again you get the reverse entry. So if you feel like, okay, I can do another one, then you could have taken the entry on this one right here, stop loss, and you can see the trade worked out. Yeah, played around a little bit, but then dropped like a stone. Another 100 and almost 140 pips down. That is a normal day. That's what I call a normal day, meaning everything looks like, what do you say, picture perfect. Those are picture perfect trades. You have your setup, you take it, you get another setup. If you feel like it, you take that too, and both times you profit, and that's it. However, again, I cannot stress that enough. Every time you go into a trade, keep an eye on those bottom indicators. And you need to anyway, because you want to see that turn green when you're in a buy, and then follow it up until it starts turning white, and then find your exit point at that point. So you got to keep an eye on that one anyway. If this bottom indicator at any point shows you red while you're in a buy position, or shows you green while you're in a sell position, then the bands are wrong and the indicators are right. Then by all means, close the buy trade if you're in a buy trade and take the sell position. You can. In this case, you can completely ignore the bands and just go with the arrow and the bottom indicators. So again, this doesn't always happen, and sometimes it gives you that setup going the other way, and then it just dumps like it did on GBP USD that day. Or it doesn't even come out. But again, if you have all confirmations, we had a white arrow, we have the support dots, and everything turns green right here, then by all means take a position here, a buy position, and take the buy trade. It's fine. Band didn't come out, but you still had all the indications that you're going up. So by all means, take the buy. And when you're in a trade, that was probably to go back. Sorry for the scrolling. I apologize. No, not here. No? I was back. Okay. Jesus, I'm sorry. I was a little back. Where was that dump? Yeah, and days like this, so we come out, you see again, we do not come out of the band because we had a very, very volatile day the day before. So the green band never even comes close. But if you get all confirmations, meaning we get an arrow here and then we get the first confirmed entry right on this candle. I mean, you can wait for the support dots, but that would give you a worse entry here. But then you get another entry here, so you could take a second position if you feel like it. I do that sometimes when the entry is really bad and I get a second entry that is a little bit higher and it did not hit my stop loss. I might take a second position, and then it still plays around for hours before it actually drops. It starts dropping right at the end of London session finally. That was a nerve-wracking day. But you can see here too, the band did not come out. Still, there was trading opportunity. So do not take that as for written in stone with the band coming out. That's usually the first indication, but it doesn't have to be. Those bottom indicators overrule whatever you see with the bands. Always keep an eye on the whole picture here. So when you see something like that, and let's say the band came out on the bottom, but then you see something setting up like this where everything turns red, by all means take the trade, going down, the sell trade. Be not too fixated on those bands. They're a good indication on a normal day. That's how it works, but it's not always the case. Like days like this, like I said, you get a nice buy setup right here on this candle. It's perfect. And even that indicator was white at that time, so it was not turned red at that point. So it looks good, and you enter the trade. Don't be fixated. This has to be a buy. and this has to go up and whatnot. Don't be fixated on it. Keep an eye on those indicators. And when you see this starting to happen, where you get a sell arrow and you get the resistance starts and everything turns red, get out of the buy trade, get into the sell trade and write it down. Do not rely on those bands for, as written in stone. I hope that makes sense. I'm heading off now. Okay. Yeah, no problem. You're welcome, Foss. And yeah, I just wanted to give that at the end. I forgot about that. Again, the bands are a good indication, but they do repaint. And if they paint a picture, but your bottom indicator says, or all the bottom indicators say, no, that's actually not true, we're going down, then you get out of the buy trade, you close it, even if you take a small hit on it. I think in this case, if you wait for the resistance starts, let me zoom in a little bit. So your entry would have been on this candle here, and then latest when the resistance starts come on the close of that candle, you go into the sell. So you lose out on 4 pips, maybe 5 pips of spread. Not a big deal. 5 pips is really not a whole lot, especially when you have a 400 plus pip move coming. I mean, look at this massive move when it dumped. So you get in here in the sell, you lose 5 pips, fine, you put your stop loss above the resistance starts, and then again you can follow that bottom indicator, and you could have held it until the next day and then some. So that would have been a massive move down. So from here, I think it was right around here to here. Yeah, that was 830 pips. Just think about that. If you follow the rule with the bottom indicator has, okay, in this case, probably would have closed it here to be fair. So you would have missed out on a few pips, but it's still over 700 pips. And you're stubborn and say, okay, well, the band didn't come out, so it came out here, so it has to go up. Don't be too fixated on the bands, like I said. Just keep an eye on the bottom indicators as well. And they do overrule the bands. So if you get a clear sell here, by all means, you got everything. You got the white arrow going down, you got the resistance starts, and every single indicator shows red. Then take the sell trade. Close the buy trade, take the hit of 5 pips or whatever, which is really not a big deal, and then go into the sell trade and say, screw the bands. Those indicators say something else. Listen to those bottom indicators. Like I said, those bottom indicators overrule the bands, always. So keep an eye on that. Just be aware of it. Like I said, you got to be aware of your surroundings, basically. Keep an eye on it. And if they all say, hey, we're going down, we're not going up, then you go down and you close your buy trade and you take a sell trade. Simple as that. That was also another reason why I got rid of that 1 hour band, because it painted the picture of a nice buy setup even more so that I did not see the sell trade coming. That's why I got rid of it. And I made it only 2 bands. And even then, like I said, you can get a false signal. This, I'm telling you, the purple band was up here, and this came out of the purple band at that point when those candles formed. So it was a perfect buy setup. But as you can see later on, it repainted, and now it looks like, oh, why would you enter here? But at the time it was. And all I did was set my stop loss to break even, and it got hit. But I did not take the sell trade because, again, I thought we're still going up. It's just another pull down and probably get another entry. And it just never happened. It just dropped 800 pips the other way. Now, knowing what I know now, especially from that day, when I see this turning red, then I say screw the bands, close my trade, and I take the sell trade. And boom. There you go. And even if this is not all red at that point, which could be, you get a pullback entry right here. Look at this. That's the new secondary entry that is in the trading rules. So if it starts dropping, and then again, at some point they're all going to turn red, and then you get a pullback entry, which again, definition of pullback entry, at least the first 3 indicators need to turn green while the bottom indicator stays red, and it needs to be at least 3 bars, which that is, and you even get another sell arrow. So you could take a pullback entry right here, and then put your stop loss right above here, which is 26 pips, and then you write it down if you want to wait to be sure. But at some point, as this starts dropping, this all turned red. So it either hits your stop loss here, or if you set it at break even, it hits your break even. In my case, the way I trade now, it would have hit my stop loss, to be honest. And then I would have just paid attention, and then when I see this going down and this turning red, then okay, I guess I have to sell. Now I know. And then I get the pullback entry right here, and then off we go. Latest here at that point. So I hope that makes sense. Just wanted to give that again. All right. If anyone, or there's only one person left, I see. If you, one person, have any questions, let me know in the chat. And I'm opening myself up to Q&A. I think I discussed everything I wanted to discuss today. So by all means, ask away. If not, I'm going to close the session at this point. But I'll give you a couple of minutes. Also, please do me a favor. If you can, like the video, subscribe to my channel. I'm trying to build it up. Yeah, I would really appreciate that. I know everybody says that, but I keep forgetting to say it, and I always say it at the end. But if you would be so kind and give me a like and subscribe, that would be very nice. I think there's nobody left. Yeah. So any questions before I close it down? Now is your chance. Doesn't look like it. All right. Well, I'm calling it a day for today. I'll be back tomorrow, Monday, for the live session. I'm going to do one more live session on Monday. See if we can catch something on Monday. And then I'll go over the rules and everything while we're trading. Like I said, I already mentioned it, but my way of taking profit next week is going to be 3% on the day, and then I'm out. I'm going to test this out and see how that works for me. If I do hit 3% every day, I'm more than happy. I don't need more than that. But again, you can always take the full trade if you want to. All right, that's it. Thanks for being here, and thanks for being part of the live session. Thanks for being part of my journey. I hope you enjoyed that video. Like I said, leave a like, hit that subscribe button, hit the bell, and I'll be back for Monday night live session. And it's gonna start 2 hours before London session opens. So that's right around 1 a.m. Eastern Standard Time, maybe a few minutes later, depending on how I get up. But my plan is to be at the chart at 1 a.m. latest Eastern Standard Time, and that's 2 hours before London opens, so whatever that is in your time. And then we do a live session together, see how it goes. All right? Thanks for being here, and you all have a good day. Bye.